All right. So could you please explain the significance of multiple dots within an RTA? Good question. And the answer is you get three dots, right? So Keith gives himself three dots or bullets to get the risk management of the execution of that particular trade correct. Normally, he's a one and done kind of guy because he really waits for that specific asset to kind of get at the extreme levels of like low in the risk range on a buy or top end of the risk range before hitting the button on a short, right? Sometimes, though, the market just doesn't agree or kind of has other things in mind, and he needs an additional bullet or two, right, to help coach us through the risk management of that trade idea. So, for instance, he's got two on HYMB and three on EPOL. But again, it really happens relatively infrequently. I can probably count on two hands, maybe three, the number of times I've seen him have three dots on the board. And again, that typically means that he like, for whatever reason, the timing of that execution of the trade has gone against them. Now, behind the scenes, the Keith might be incrementally touching that position in some manner without hitting the button again, right? So if he's got one on the board, it goes a little bit higher, he'll probably sell back, if it's a short, right, he'll short some more at a higher level. But once he once he makes that decision to sell some or all of that position or anything related to that position, whether you put on kind of an options trade or something like that, he will send a sell signal shortly thereafter. So as soon as he's touched the button to kind of close out a portion of that position, he will hit the button. I think a good example might be HYMB here, right? So he hit the button originally on November 16th. At $49.17. Then again on November 30th at $49.84. It's currently trading about 50.41. So the top end of the risk range of the published range from ETF Pro on Monday. So that's a good thing, right? We've been kind of waiting for that. It's been about 2 weeks, call it, since we kind of hit the button originally, and about a week since he kind of tapped it again, right, on November 30th. But just note though, right, like this is a good example of going back to that question of like the dollar making lower lows and lower highs. This short and a lot of them actually this week in the trend ranges, made higher highs and higher lows, right? So you got to be paying attention to that dynamic. And in this case for HYMB, it's made higher lows and higher highs for 2 weeks in a row. I didn't go back another one because I just didn't have time, but it's definitely done it 2 weeks in a row. So, you want to be conscientious about that, right? So that is not saying that signal has really kind of gotten a little bit stronger here in the immediate term basis, right? So, if it's broken trend, I'm almost positive that Keith would have, ripped that thing right out of ETF Pro. So, it's likely still, it's very likely, I haven't asked them yet though, so I'm just going to say very likely that it remains bearish trend, but it's likely bullish trade at this point in time. So you could kind of call that quasi neutral, right? So really, what do you want to do with that, right? We got to kind of like, if you followed in on that RTA, you got to risk manage that position, but you're probably going to keep it on a bit of a tighter leash, right? So here you've been waiting for the top end of the range. It just got there today. So maybe you hit the button, right? And you sell some more, or you add some, a short options position, or sorry, a put options position. Right. But at the same time, you're going to want to try to build some asymmetry in that portfolio. And I mentioned this earlier about Europe, but, it's really important, right? So, this might be your high yield MB exposure. Maybe you got a little, HYG, right? You can take those fixed income shorts a little bit higher because they have less volatility. They're lower beta. And yeah, so kind of like, again, you want to be conscientious of like how big is that one position in aggregate with like the overall kind of exposure to like high yield, right? So in conjunction with junk and HYG, but then also kind of like, how is it functioning with my, how big am I in XLK? How big am I in QQQ, et cetera, et cetera. So, again, I think that's really the biggest thing here. I think the other thing to be taking away too today, right? If you kind of are continuing to connect the dots, is that Keith, as I mentioned earlier, is increasing his net short position from minus 1.3 at the close yesterday to minus 4.1% about a half an hour ago. So all that in conjunction, he hasn't hit the button a third time on HYMB. I don't know if he will, but this is an opportunity for you to kind of, work on your process, get comfortable with your process, execute perhaps in that name. I'm not saying, go out and do it, but, do whatever you need to do, right? Hopefully it's only at kind of like a mid-sized position for you. And, but really in this case, you're likely until that starts to kind of confirm a lower low and a lower high, you're going to be probably pretty quick on red to sort of kind of cover that HYMB position. Now it is an ETF Pro, so I'd consider it a core position, right? So you're going to want to kind of, but maybe you kind of gross it up here at the top of the risk range, goes down on red, you cover some a bit more aggressively, bring it down back down to kind of towards your mins and just kind of see what the signal does, or kind of tells you on Monday and next week and that kind of thing. Because the other thing too is inventory, right? So you can go find, even if you gross it up, you sell it down, and kind of cover some more quickly. You can go find other inventory that's got a better short signal on it.